Hi friends, in this video I will let you know what have been my worst investing mistakes so far in my personal investing career that has lasted something like roughly 7 years now. I have identified 4 points, 2 of which are basically some investing background theory kind of things, and 2 are actual stocks, actual companies I wish I never invested in, at least at the time I did invest. So without further ado, let's begin with number 1. And the first mistake is that I did not started studying investing earlier in my life. When I picked up interest in investing, I was something like 25 years old. Now I'm 34 years old. So I'm approaching 10 years since I first even started thinking about investing, like what is it all about and stuff. I hope I was younger, because obviously when you're younger, when you start, the money sums are usually smaller what you lose in the beginning when you do stupid things, as every beginner does. And also when you start earlier, there is more time for compounding interest, compounding to happen in your portfolio. So it's better you start early in your life when it comes to investing. Now, I'm gonna critique a little bit that when I attended business school for 5 years, and I never saw a course that would taught investing in a business school, where most of you viewers who are not from business schools might think that well, in business schools you obviously learn how to invest. Well, no, there are no courses on investing, at least in the business schools I attended. I wish there was courses, and even more, I wish that investing is such a topic that I think it should be taught to all people, definitely not only business school people, but all people already at high school level, for example. I mean, basic stuff like what is compounding interest, what are stocks, what are bonds, what are ETFs, how do interest rates and inflation work, all that really basic stuff that relates heavily closely to investing. I think this would equip a young person to seek deeper information on investing by themselves and have the basic toolkit on money for life. It is failure by our school system. This does not exist, or at least didn't exist when I was young and turning 18 years old and that age. For example, how many of you know that if you had a $1 in your bank account in the United States, in US context, because I'm speaking about dollars, purchasing power now, you had $1 in 2020 in your bank account. Now in 2024, that same dollar has the purchasing power of 83 cents. So magically, somebody has stolen 17% of your money in your bank account from 2020. When I realized this, and I think I saw this on Twitter for the first time, I needed to go and double check it from online, Googling it, because I didn't believe that inflation has been that hard the last 4 years. And that's the thing, somebody has just stolen 17% of your money in your sitting in your bank account now. I think that was a shock for me, even though I consider myself pretty deep in this investing scene and know a lot about this stuff, economics and investing. But for someone who really doesn't think these things every week, that might be a bit of a shock, because it was a shock for me, definitely, that money sitting in your bank account, 17% has disappeared somewhere in purchasing power from your bank account. Think about that. I think after one has learned all these basic concepts in school, maybe in high school already, one is ready to start studying more deeply investing and actually start thinking about investing in specific stocks. Well, then we move on to my mistake number 2, which is obviously when you are a beginner and you start investing early, you will do some stupid mistakes. And luckily, when I started investing, it was 2018, so there was still the legendary bull market we have been having was still going on strong. So I got lucky, I didn't lose money, but I have to say that I might as well have lost more money than I did. I was just lucky because of the bull market, because every stonk was going up. I started investing, for example, in banks and tech businesses. I didn't really understand how their businesses work at all. I didn't even know how to do a proper discounted cash flow calculation myself to do a valuation on a company, or I didn't know any other asset valuation method for that matter. What I did was that I just relied on other people's opinions, which are never enough and is a huge mistake. You need to do your own valuations every single time when you're investing, or you lose your conviction when things get rough. You start considering that maybe this person you heard this good investing tip and this great company is a stupid person and don't know what he or she is doing. Might be that he or she doesn't know what one is doing, but more importantly, this creates panic in you, and when you see that stocks don't only go up, you will start panicking, start doing stupid decisions, stupid things. If you don't have a true conviction, which can only be achieved through your own valuations and your own work, you need to deeply know yourself, roughly what this company is worth, what the stock price should be, and I can tell you that it is just not enough. If you can't build that big of a trust in any person, the trust needs to come within you. I suggest sticking to different sorts of ETFs, exchange traded funds, until you learn how to do your own valuations on individual stocks, individual companies. Simple as that. I strongly believe that this is the right way to do investing and start your investing journey, and I believe if Warren Buffett was asked about this, how one should start investing, I think he would probably also say the same things I just said. Start with the ETFs, and once you get more education, more knowledge, then you can move on to individual stocks. Then let's move to my mistake number 3 out of 4, and now we get to the stocks. Gasprom is my biggest mistake even. I invested 1 year before Russia's attack on Ukraine in Russian gas giant Gasprom. I lacked understanding how bad of a country Russia is and how their values differ so much from us Europeans. And I thought interconnections between countries through business would be power strong enough to prevent wars, but obviously I was wrong. I learned the geopolitical risk the hard way. I should have studied more Eastern European and Finnish security experts. Luckily, Gazprom was at the time something like a little bit over 5% of my stock portfolio, so even though I ended up selling the next day since the start of the war with minus 50% losses, in the big picture my losses were quite limited due to small allocation. Luckily, because I did understand that this could be the worst case scenario, even though I believed it would not have happened. And you can go and check this when I did my deep dive stock analysis on Gazprom. You can find it in the early days of my channel. I think I said there that I don't believe that these kind of things will happen, but this definitely is a scenario, worst case scenario that can happen. So sadly it did. Lesson learned was that geopolitical risks are real in the world and need to be discounted for or in context for Russia. Personally, I don't think you shouldn't invest to Russia at all. This is what I'm doing in the future. I don't think I will see such a development in Russia during my lifetime, where human life is valuable and assets are truly private enough and secure for me to be fine with investing in Russia. Also, this is no personal choice for me not to invest there, at least before Ukraine has their country back, has their lands back, and Russia has paid war reparations to Ukraine. Before these things have happened, I won't even consider Russian market even in my wildest dreams and thoughts, and obviously there needs to be a new generation of leadership in power in Russia before I would even consider investing in that country again. Moving on to mistake number 4, and that is one of the biggest positions still in my portfolio, Alibaba. Let me explain. I have been investor in Alibaba for over 5 years already, and as all of you who know Alibaba and the stock price, I can put it on the screen right here. You can see that it's painful. I think I am down on my big position in Alibaba something like minus 30%, a little bit more probably, somewhere there in minus 30, minus 35 probably. Again, geopolitical risk has caught me on this one, even though there hasn't been any shooting yet related to China, obviously. But there has been super bad sentiment on any Chinese stock, basically due to China's discourse on Taiwan and China's alignment with Russia more than with the West, with the ongoing Ukraine war. Personally, I understand China's policies of not taking part in conflicts elsewhere in the world. That's their policy, their countries, and has been, as I understand, quite a long time. But I have to say that failing to condemn the actions of a monster that Russia is, that is a really bad look on China, looking here from Europe, from Finland. Have to say that, because it's true. And with the USA, they have had their issues for a longer time, as probably all of you know, dating back to beginnings of Trump's presidency, and Biden administration has had equally negative stance to China too. So many issues between USA and China relations, many issues with China overall, starting from macroeconomics and how their economy is doing at the moment. So you count all of that together and you get extremely bearish sentiment, at least in the investing West, towards China and basically most of the Chinese stocks in the stock market. And for sure Alibaba has been caught up in that too. But still, I believe China is not Russia and Russia is not China. This is something I've said on my channel earlier before already. I have that big Alibaba position still in my portfolio, and I want to believe that sense wins craziness in China, unlike it did in Russia when discussing Taiwan in particular. Let's see how this story unfolds. The mistake, in a way, still is not a big mistake per se, investing in Alibaba, as the story still goes on, but I admit that this has been bad capital allocation for the last 5 years now. But so is investing sometimes. As Peter Lynch says, for an investment thesis to play out, usually it takes 2 to 7 years in many cases, so I am staying patient for now with Alibaba. The divergence of, for example, the development of the share price of Alibaba to its free cash flow it generates, it is almost amazing. Go and have a look at that. For example, on my Twitter account, you can see a link to my Twitter, I think, in the description of my channel. I just posted it, was it today or yesterday, that when you compare Alibaba's share price to its ability to generate free cash flow, the divergence of last year's is nothing short of amazing. This means either that the worst things possible are going to happen with China, or at some point Alibaba's share price will catch up on the business fundamentals. Obviously, as the Alibaba is still in my portfolio, I believe in the latter one, that business fundamentals will catch up, or the share price will catch up on business fundamentals, and this will be a successful investment. But as shown with the Gasprom Russia example, all scenarios, even the worst ones, are possible, and then it's up to you as an investor to decide what kind of risk you want to take, how you discount that risk in your portfolio in relation to, for example, investing in China. But as said, I still believe that sense wins in China, unlike it did in Russia. Here were my biggest mistakes so far during my investing careers. If you are brave enough to share your mistakes, I would be really happy to learn about those things, because in every mistake you have a possibility to become a better investor, learn from that mistake, and as they say, probably sometimes it is good to learn from other people's mistakes, but when you do one mistake yourself, be sure to learn from it and never do it again, and that's what we call progress, I think. Let us all know in the comments your mistakes, and I see you in the next video. Bye bye!